Here on the Market Day Report, it's time to get you up to date on these numbers and the analysis behind them and what is making those numbers move. We had some export sales numbers. They didn't really do much for the market, but we're going to find out why the market is trending the way it is with Jim McCormick with Allendale Incorporated. And Jim, today we've got a major turnaround here in this grain complex, and it seems to be that the beans are leading the way lower.
Yes, sir, John. That is what's going on. The beans are definitely leading us lower. We're down about 12 cents currently. Plain and simple, Friday, the market broke out of the double top that every trader, technical trader, was looking at. Those were the highs made back in the early part of September when the market kind of stalled out at the 978 level. We also had the 200-day moving average, which is trading at also 978 today. So when we took that out on Friday, all the technical buyers bought into that breakout because that double top breakout projected the market up to 1015. But unfortunately, it stalled out at the long-term downtrend line on Friday and again last night, and now we're back below the 200-day moving average, back below that double top breakout point. So pretty much it's called a bull trap. Everyone who bought it for Friday is now kind of running for cover today, and that's what I think is putting the pressure on the market at this point.
In your opinion then, Jim, how far back can this market fall before it hits some support?
You know, I wouldn't be surprised if it pulls right back down, all the way back down toward that 960 level. That's where the 100-day moving average is. That's also right there where the 20-day moving average is. That takes it back down to last week's lows. Harvest activity is ramping up. I mean, I tell you what, here in northern Illinois, we had customers that said, hey, we won't be into these beans until the end of this week. Well, heck, they got into them this weekend, and they're finding bean moisture, below 10% in some of these fields. So the beans are drying down fast. Harvest is going to ramp up, and that's also going to put some pressure on the market, I got to believe.
How much attention is being paid then to South America and their planting progress?
Well, I think I think people are looking at it just slightly. I mean, we're focusing in on the U.S. market right now. Actually, if you want to look at the South American weather, today it's probably a little bit more bearish than what it was going home on Friday. They've been too wet in Argentina, a little bit too dry in Brazil. Brazil likes to get a big rain right as they get into planting. Well, the rain hasn't been there, but right now the maps are suggesting we've actually got a little bit of rain coming in for Brazil for the weekend. So now you kind of got the trifecta for the bears. You got rain moving in for Brazil, which is bearish. The charts are turning bearish after looking bullish on Friday, and harvest activity is ramping up, which right now the producers seem to be a little bit more interested in selling beans and storing corn at this point.
All right. Well, Jim, let's take a look at these numbers here as we are moving. We're about halfway through the trading day now, and right now we've got December corn down 1 1/4 at 352 1/4. March corn down 1 1/4 at 364 3/4. It's November soybeans down 11 3/4 at 972 1/2. January soybeans down 11 1/2 at 983. December Chicago wheat, though, is 3 cents higher, 452 1/2. July wheat up 1 1/4. Kansas City July wheat is up 2 3/4 at $5 1/4. And look at this Minneapolis wheat market up 11 1/2 on the nearby, 646 1/4. March up 12 at 658, and the December cotton contract up 17 at 68.63. Jim, what do you think of this wheat market on this soft wheat market?
Well, I think the wheat's definitely being led up by the Minneapolis wheat. I think that has to do with a lot of the trade looking at. We're getting estimates for the wheat production that gets released on Friday and the quarterly grain stocks. And right now it does look like the spring wheat crop's going to be a little bit smaller than we thought last week. And I think that's causing a little bit of short covering by the wheat. The funds have been short wheat for quite a while now. And like I said, I think that number's got that, seeing that average estimate drop about 20 million bushels, that's enough for them to scramble out of some of these shorts in front of the report.
All right, Jim McCormick with Allendale Incorporated, and we'll check the livestock. That's coming up next here on the Market Day Report. Jim McCormick with Allendale Incorporated in McHenry, Illinois is here with us. And Jim, let's talk about this protein complex. A lot of downside pressure here on the cattle market, and is it carrying over to the hogs?
Actually, it's not. The hogs are actually relatively quiet. I mean, the cattle's pretty much limit down across the board. Feeder cattle are also limit down, but the hogs, relatively quiet day. We're up about 50 cents in the October hogs and up only about 15 in the D. So, not really having an impact one way or another at this point. But there's no doubt about it. That cattle on feed report was a lot more negative than the trade is looking for. It's that placement number that's causing the market to crash. When the trade's looking for placements to drop and instead they increased, it definitely caught the market, facing the wrong way.
Taking a look at these cutouts, both the beef cutouts and the pork cutouts here at midday, a little bit of strength on both of those. And I want to focus in on this beef cutout here for just a moment. Up $1.78 at $193.38 on the choice. Select up $1.56 at $190.29. Is this enough optimism to help this cattle market maybe pull back from limit lower today?
I don't think so. I mean, at this point, maybe late in the day, we'll see a little bit. But the fact is, it was up, but it was only on 44 loads, so I don't think it was enough to get them really, really excited at this point. I think this is, like I said, more than anything, the fund trader got caught long. He added into this report, and it's going to take a little bit of them to wash out. With us gapping lower, I would expect maybe a reprieve after we open down hard tomorrow morning and then see somewhat of a little bit of a dead cat bounce. But that may not happen until after the opening tomorrow morning.
Sure. I want to talk about the pork cutouts real quick here. Belly is actually up 567 right now. This morning, the hams are higher, the loins are higher, carcass is higher. A little ray of sunshine here.
Yeah, I mean, hopefully, that's the key right now, I think, to both the livestock, both the cattle and the hogs. We want to see the consumer come in and buy. If you can see those pork cutouts going up, showing that the demand's there, that'll be the very critical sign that, hey, maybe we finally put these the fall low in on the hogs and kind of stop the slide in the cattle market.
Jim, I want to get your thoughts on this energy market. Crude oil making a big move today, up to 108 higher here just a little bit ago. And just checking right now, we're trading at 51.72 a barrel, up $1.06. December up 99 at 52.02, and that heating oil is following that. We're already up to $1.84 a gallon.
Yeah, pretty much what's going on, John, is it's a little bit of fear being put into the market. The debate comes back between us and North Korea, keeps coming back. Today, the North Koreans essentially said we declared war on them. That put some fear into the market. Then also you got this Kurdistan referendum. They want independence. Most in the Middle East do not want them to have independence. If they do declare independence, it's just going to put one more hot spot in the Middle East. And with a lot of crude being produced in the Middle East, obviously, that's just not what we need. So the traders are putting a little bit more risk premium into the market.
This will be interesting on the charts, too, because that crude oil market had been just marking time, kind of chopping sideways and range bound.
It has, and like I said, that's a very good point, because what's interesting, if you look on this front month November crude, we've taken out the 200-day moving average. It had kind of formed a double top, so we're breaking out. Just like the beans broke out yesterday, we're doing it in the crude today, and so you got a technical friendly picture, and you got a fundamental reason to buy it. So we could, this crude oil may be off to a little bit of run this week.
Real quickly, then, where do you see the top in this next move?
Well, right now, I would say your next resistance point is going to be around 52.62, but, I wouldn't be shocked if these things really heat up in the Middle East. Moving back up into the mid-50s isn't out of the realm of probability.
Okay. Mr. Jim McCormick with Allendale Incorporated, our guest here for this portion of the program. So crude oil market really making an interesting move today, Janet.
All right. Thanks for bringing us all up to date. We appreciate it, John.
Yes, ma'am.